Yo, what's up, guys? Chimp here with another very quick market update. The market's moving a lot, so I want to publish these more frequently. At some point, the market's obviously going to slow down. We get a situation like the FTX lows at some point. Like, I'm not going to be publishing a video more than once a week. But here we are. The market's, pumped like crazy in the last 24 hours, basically, since the last time I published a video. And actually, a lot has changed in that 24 hours, believe it or not. Biggest thing is the alt, I don't know if you want to call it a catch-up trade or you want to call it something else. That trade has now spread effectively to all alts. And as a result of that, like people are basically leveraging across the board and you haven't gotten a flush on anything. I think that's one of the key things to sort of note here, which is nothing is really flushed. Like you've had like very small pullbacks, but for the most part, every asset's been up only. And alongside that, you've had open interest which has steadily risen. It peaked at 99.5 billion global open interest. Just as a reminder, in December of last year, we peaked around 92 billion or so. So open interest and also global open interest is up about 30 billion in the last 10 days or so. So there's been a lot of leveraging taking place. There's been a lot of one-way up-only price action. And at some point it's going to flush, right? Like clearly parabolic trends. And this is something I like think about a lot, which is if you had a situation where Bitcoin is pumping on its own, or it's like Bitcoin and ETH, like pick Bitcoin and some one or a few outlier assets. That's one story. But if you have a situation where Bitcoin is pumping and everything else is pumping alongside it, and everything else is pumping harder than it, it's a ticking time bomb. It's almost always been the case. And yeah, like if you're sitting on the sidelines, you might miss huge gains. But again, it's some sort of ticking time bomb. We saw this in March of last year when we broke 65K and Bitcoin went all the way up to 74, right? And certain alts did really well. But ultimately, like when they pulled back, the pain was quite severe. Similarly, we saw that in December, right? Like December was up only once you really started passing like the low 90s and gone to like the high 90s, low hundreds, higher hundreds, like you probably missed out on a lot of potential altcoin gains, right? Like virtuals, etc. But again, ultimately, like that was probably a good time to actually de-risk. So again, global open interest straight up, leverage going straight up. No one who's long's been punished. So it's been, and let me just pull up one other tab that I didn't have. I just basically pulled up a couple tabs of things that I want to go over. Nothing too crazy here. Okay, this is the last tab, and I'll talk about it in just a second. But again, leverage going straight up. Let's go over alts, right? Like every alt under the sun is pumped. Again, I think ETH is the exception, so I don't like really pulling it up because, and I really do view it as sort of the exception. But again, ETH up 20, ETH BTC, sorry, up 25, is it 25? 20% in the last day or two. That's not even like a very big outlier. XRP is obviously the big one. XRP up basically almost, let's call it like 60-70% in the last 10 days or so. In the last day, it basically pumped from $3 to $3.60, right? $3.65. So and again, it's like it's pumping with almost no pullbacks. Like you can look at these candles, like yeah, it pulls back from 305 to 280 or whatever. Like that's nothing, right? Again, it's not just XRP. Like shit, like Doge has been pumping, and I think something like a Doge is a good barometer actually because we had like the actual like blow off bubble top at 50 cents. Like you shouldn't expect this to sort of hit again anytime soon. So whenever you get these sort of big pumps in Doge, I think it's sort of more of the canary in the coal mine than it is sort of an outlier. Like I think ETH has been so washed out that like people used to view ETH pumps as like, oh, this is a red flag. I don't do that anymore. I view ETH as basically having been cleansed and now it has a second lease on life. I think Solana, on the other hand, something like a Solana, is an outlier because it's been such a retail heavy, like basically all the parasites, they didn't go you didn't have parasitic projects launching on ETH in 2024, right? But you had a shitload of parasitic projects launching around Solana in 24 and 25. And so I view Solana more as like, hey, when this asset's like actually strong, like let's say this legs up to 200 or 220, which I don't even know if it will. Like I view that more as like a parasitic asset that you have to watch out for, rather than a ETH or whatever else. So again, you've had that. Also, I want to show one other thing, which is Bonk, which it's been pretty good at calling like areas of high froth, which is every time Bonk has had like a mega pump, like it's consolidated, it's gotten cheap, and then it's mega pump, like these vertical pumps, it's always been the sign of like an area of probably a local top. Like the first time was in March of 2024, and that was the 74K top, like within a couple days. The second time was May of 2024. Again, that's when we sort of retested the low 70s and then dumped out. That's actually where, like, I don't know if you guys remember this, but that's where Zoran actually got super bearish, and he basically like top shorted the entire market there. Third time, November of last year, and I guess it pumped and the market continued to go up. So you could say maybe it was a little bit early. It might have been a little, I'm not sure what the exact date was here, but it could have been a little bit on the earlier side as well here, because if I remember right, Bitcoin was still sort of around 70, even a couple days later. So this might have pumped like more when Bitcoin was at 65. And again, now we have like this vertical up only move. Some would say it's like more fundamentals driven or whatever because of Bonk Fund. But regardless, like, again, you have all this sort of crap pumping. Let me just keep going down this list real quick because I don't want to make this too long. Funding rates, a shitload of red, right? Like at the lows, you have, my friend and I would used to call this like the sea of green and the sea of red. At the lows, funding rates are usually either neutral or, negative funding rates. Funding rates now are like all high, right? Like on all these coins, on all, like almost all these coins, on almost all venues. If it's not Bitcoin, like funding rates are elevated. Like if it's not Bitcoin and ETH, I guess. Two or three other quick things. Again, don't want to make this too long. One, Coinbase breaks into the top 100. Maybe there's some room for it to continue to run, but something to consider. Maybe a little bit of a red flag. Two other things. Bitcoin flows. Clearly, they've been very strong. I'm actually not sure why all the flows are in IBIT. Like if you look at the last 7 trading days, like only been one day where the other ETFs sort of got some inflows as well. But for the most part, it's all in IBIT. And again, like this is why I think like actually there's more fragility than people think, because when you have like inflow, like crazy amount of inflows, like when it's slow and steady, like the flows that are coming in are probably unlikely to really be shaken out. But when you have like clearly you have like TradFi euphoria and so forth, like those flows are probably a lot more likely to sort of be shaken out of the market. So like if 20 billion was added, my mental framework, and it could be totally wrong, is take about like a fourth or a fifth of that as potentially being able to come out with relative ease if like stocks go down. And again, like I can't predict the stock market, but I don't think these flows are all sticky. Like I think a lot of these probably eject if they have a reason to. Could be negative price reflexivity. It could be because of something external like stocks dumping. Last thing I want to go over, and again, like if you want to hear more bearish reasons or hear a rant, go watch yesterday's video. Fed funds rates. People were expecting 3 cuts by the end of the year. People were like for sure expecting a cut in September. I wish I could view the. There might be a way of looking at it, but you look at like the historical probabilities of this. Like now the market's 50-50, right? Like maybe there will be a cut, maybe there won't be a cut. So this used to be like for sure a cut, right? It used to be for sure 3 cuts. Now you look at the Fed funds rates, they're pricing in 2 cuts, sort of biased more on the 1 or 2 cut side. Like there's a lot of underlying, like also you look at things like the 30-year, I'm not going to pull it up, but I'll just mention it here quickly. Like the 30-year stuck at 5%, like rates are not going down, right? So everyone waiting for like this Fed pivot. While Powell's in, I don't think you're going to really get it. Also, one other thing I've seen a lot of people say is like, well, Trump's going to put his lackey in and whatever. Like, when you see this level of mania, it's not going to last another 6 or I don't know what day Powell exactly resigns. If I remember right, it's May of next year. Let's look it up. Powell last date. If I remember right, yeah, May of 2026. So when you have like bubble level behavior going on, expecting a 1 year plus put is not going to work. And like again, people are thinking like Goldilocks because Trump's calling for 1%. I guarantee you, if he puts like a Bessent in there, Bessent's not going to cut it to 1%, right? Like Bessent might go in and cut 50 bips or 100 bips or whatever. Maybe he cuts even 150, right? But like Bessent's not going to go in there and cut rates to 1% because Trump orders him to, right? He's going to, best case, do something that's sort of in the middle of what Trump wants and what the other Fed governors sort of think. So, anyways, like my views remain the same. I think risks are high here. People are underappreciating the risks here. And we'll ultimately see what happens. Like, again, when I see every asset under the sun pumping and TradFi involvement and etc., and maybe the bubble's not done yet, right? Like now I saw something where Trump wants to approve 401ks to be able to buy crypto. Maybe not everything is done yet, but in my views, like you just have so many sort of like caution flags and red flags. Like it doesn't make sense to go leverage long here. And I just, I'm sort of putting this message more out in terms of like, hey, this is what I'm thinking. And I really think that caution is afoot here. So anyways, guys, thanks for listening. Keeping it on the shorter side. Any questions or comments, leave them below. I'm more than happy to answer it. And yeah, see you guys next time.